Hey everyone, this is Will, aka Dr.FinancialLiteracy. Hope you're having a great day and welcome aboard. As I stated before in many of my previous videos, I am a political economist, and as a political economist, I generally have looked at interactions between the government and the economy and how it impacts individuals and groups, how it benefits some, and it does not provide as much benefits to others. Um, and this is the first time that I'm introducing just two of the books that I worked on. This first book is City County Consolidation that I wrote in general, looking at how cities and counties merge and who benefits and who also gets some aspects of it. The second book that I wrote, also self-published, was Organizational Behavior in Theory and Elections, as I administered elections, pulled data together, and help other public administrators. So hopefully the next book I write is Velocity Banking in general. So look forward to that, doing that. So yeah, thank you for stopping in. This is day 94. I'm very happy. Excited about some news that'll be coming up soon. Don't want to kind of like spoil the surprise, but it's something that I've been working on. And for many of you who have been with me on the initial journey, you may know of what that was, and I'll hopefully reveal it in the next coming days if all goes well. So now we're at day 94, and looking at velocity banking in general, as defined early, velocity banking has been me utilizing a line of credit, particularly credit cards, to reduce debt. So in starting this journey, I would say I had maybe $30,000 to $40,000 in credit card debt, if not more. But I've turned that around in the sense that now I am using that debt to pay down debt. And all I did was one simple, well, I would say two major changes. One was a change in my mindset and where I was putting my money, as Christy Van, Denzel Rodriguez talks about, the Clark brothers, and others, is where you're putting your money that it really helps to shift the narrative of your life. I was historically getting my paycheck, putting it into a bank, then going from my checkbook, then paying bills, which included checks, which included MasterCard, Visa cards, different types of credit cards, student loan bills, and also I am still carrying three mortgages that have to be paid each month. Okay. So that was my that was my previous way of thinking. Letting the money sit in the bank until the end of the month and then making a payment accordingly to the payment date. Now, the new way that I was doing it within the velocity banking and with the advocates was pointing out was your money is not really doing anything for you sitting in a checking account. I had at least maybe $2,000 to $3,000 that was sitting in the bank, and I received probably less than 10 cents in then having that in emergency savings for an entire year. As a part of velocity banking, the advocates indicate your checking account will be replaced if you're able to get a home line of credit. But what I did was fundamentally replace one of my credit cards each time that was carrying a significant balance. And then I was going from my job to the bank, selecting one of, I think, 6 or 7 credit cards that I had that was carrying balances, placed my entire check on there. Now, this was a process because, as you noted previously, I didn't put my entire check on it. I had to ease into it. So there was a few bills that I was able to put on a card in the beginning, like my car insurance, food, gas, daily eating in general, groceries, minor shopping. So I knew I was going to do those things. So when I got paid bi-weekly, I just went ahead and put a significant portion the first time out onto the card. Then I started paying those bills from it. As you put your check onto the card, it acts as a payment and it still frees up money onto your card. So say the credit card had a balance of $1,000, I would take my paycheck, say $500, put it onto the card. That card, say, had a $100 monthly payment. That $500 check that I placed onto the card actually became the $100 payment. And then that still allowed me to still have this much in there to work with velocity banking. So it's kind of like killing two birds with one stone versus just waiting to the end of the month, paying that $100, and then I had money still sitting in the checking account that was not doing anything for me. I think that fundamental shift of now having as much of my check sitting on the cards that I had balances on really helped me to bring down the average daily balance and the interest rates. So if I started off with $1,000 and every 2 weeks I put in about a little over 3,000, then the average daily balance was coming down, but I still had to go back and pay bills, which brought it back up. And that's what I've been trying to show throughout the videos over the last 94 days as I've come to understand velocity of banking and practice it. When I first started trying to look for a home equity line of credit to pay off my 3 mortgages, I went to 15, I think maybe 15 plus lenders, and pretty much I was turned down. I did secure $100,000 at one point, but then the vendor looked at the paperwork and said, "Oh, we thought this was a single family loan," and they pulled back the loan itself. The $100,000 loan was in my account that morning, and they pulled it back. So I took a screenshot of it. I was very happy. I was jumping up and down. But 30 minutes later, they pulled it back. So with that, I went back to the drawing board. I regrouped after the initial kind of shock and came across velocity banking with Christy Van, with the PLOC brothers, with Bruce, and also Denzel, and a number of other individuals talking about velocity banking. I was like, wow, what is this? Let me look at this. Let me think about this. So I looked at it for probably 3 to 4 weeks to get the concept down and what was really kind of going on with it. And then I tried it. I put 1 or 2 bills on it. Then from there, I went to do my mortgages and also my rent. So now I got to the point where all of my bills are ran through the credit cards at this particular time. Every bill I have is ran through my credit cards. So I was able to put everything now onto the credit cards. Pretty much 100% of my salary has gone onto the credit card debt. I came off as an authorized user on some credit cards and also paid down some debt. So at this particular time, in looking at one of my credit reports for TransUnion, I'm now at 309,000. So what's next? What is next for Dr. Financial Literacy with Velocity Banking? I'm gonna keep going. With Velocity Banking, bring it to the community, try to help the community understand I'm working with more and more clients to understand velocity banking and helping them make the mindset change and the financial change to really try to work on their debt. So hopefully over the next couple of days, if not sooner, I'll know if I'm going to the next level in terms of velocity banking and the additional tools that I bring online to try to bring down this $309,000. So again, thank you very much for joining me. I am not a trained CPA. I am not a certified financial planner nor an attorney. I'm just a political analyst that is trying to use some of his background to look at velocity banking and test some of the major assumptions. And so far, the assumptions that I've tested in general, yeah, have worked out well for me. And I'm kind of an advocate for it. And next, moving to the next level. So thank you very much for stopping by. And if you want to do some work with me, or you have any questions or anything that I can help or answer about velocity banking, my contact information is inside the description box. Please give me a call or send me an email. Okay. Thank you very much. You have a great day.